Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So you can see recently it was significant plunge down on gold, not only on the gold, actually on other dollar rivals, let's call it in this way. It's just because very simple reason. So if we take a look at the interest rates, you could see the rally above the 1618, 162 area. So as I said in today's video on the euro currency, we should not overestimate the importance of this action. Yes, this performance in general suggests that investors believe, or at least trying to show that they believe, that Fed will accomplish all hawkish steps that it has promised to do. And with this rally, investors express their opinion that overall currently situation stands friendly to hawkish steps from the Fed. But in reality, since we haven't got any statistics on this week and the next week, where we will get the first information of this year on inflation, retail sales, job market sentiment, this is mostly just an opinion. So we don't have the background for that, and situation could change really rapidly in the same way as yesterday rally has started. So we should not ignore it, but also do not think that this will totally change the overall sentiment on the market, and market will keep dropping and interest rates will keep going higher. It's not the way yet. It's just because nobody knows the real impact of the Omicron, since it is not reflected in the statistics by far, and the first numbers that we will get will be the first numbers that will show some impact. And in general, it is unclear what the really condition the United States economy stepping in the new year, which should be clarified with the numbers that we will get in this week and in the next week. So for a short term, this is really important, this action, and how it's reflected on the gold market in the opposite direction. But at the same time, it would be better to not treat it as the decisive moment, that it's definitely something like new trend that starts to develop here, because this is mostly the attempt to shake the boat and play on the fears of the market society, so among the big investors. So yes, of course we will have to adjust our trading plan, but it doesn't mean that gold totally has erased the bullish context. So not yet, although of course currently the price action will be more difficult, and we will have to get more confirmation of the bullish sentiment on the market. So in particular on the daily chart, you can see right from the 618 level that we have mentioned in the report, 1830, this was sharp reversal here. Market has formed a bearish reversal swing, but at the same time market is coming to the MACD, where as on the euro currency, as on the gold, we should keep an eye on the flirting price with it, whether we will get any bullish crawlers around it or not. So this is the first moment that we need to keep an eye on the daily chart. On the 4-hour time frame chart, recent price action reminds possible free drive sell pattern. So because extension stands relatively tight and the market has passed through the COP target of this ABCD pattern, but it has stopped precisely at the 1618 extension of the BC swing. So this pattern is still valid, but with this free drive and with recent sell-off, it suggests that some downside continuation really could happen. So probably we will get different shape here, it will be different setup, because based on this ABCD it's very short term, and with recent sell-off with a free drive in place, chances that market will drop a bit more and taken out of these lows stands significantly. So it means that ABCD pattern could fail, despite that market stands at the major confidence support 18 even. If somehow market will still able to stay above this area, it means that short-term context is still valid, and especially if we will get the bullish grabber on a daily chart, that could lead to the earlier upward reversal and upward continuation. But for truth's sake, guys, with this bearish reversal candle here and with the 3 drive that suggests the taking out of these lows, chances that market, despite that we have the confidence on the 4-hour time frame chart, chances that we will have sharp reversal up from here stands not very significant. So just based on the probability approach, combination of the bearish strength here suggests that it's more probable that market will drop a bit more, and maybe we will get something around 618 level, 1782. So currently at this point, despite the confidence support that we have, it would be better to not take the long position by far and wait at least what will happen on the daily chart and what will happen around this area on the hourly chart. On the hourly, here we also do not have anything special. So market has dropped, but no bullish patterns have been formed here. So here is another moment that we need to get is some bullish pattern on the hourly chart now around major support. So currently, this is actually the same combination of the factors that we intend to keep an eye on as on the euro cards. First is grabber on the daily, second is the strong support that we have on the 4 time frame chart, and third, bullish reversal on the hourly chart that we should get. If we will not get this context with these all 3 factors, hardly will consider taking the long position, because recent plunge has the significant impulse down, and without these factors it will be very risky even to consider taking the long position. So it means that in this case, if we will not get any supportive factors, bullish factors, we will keep an eye on for the next strong support area around 70-80, and then we'll make the decision what to do next. It is interesting price behavior with the euro pivot point that we have discussed recently in our weekly report. So take a look. In fact, on the first touch, this was the primary area that we suggest for taking the long position, and you can see the balance was really nice. So it's more than enough to move stops to the break-even, but as a result of this action, you could see that later market actually has formed minor head and shoulders pattern. That led to the collapse here. Not the shape itself, but it was prepared, the collapse was prepared by this pattern. So, but still, first reaction on the support that we have discussed has followed. So that's actually what we have on the gold market, and actually, guys, the situation could change drastically with the first statistics that we could get. On this week, we will get multiple PMIs, non-farm payrolls, and then next week we will get retail sales and inflation data. So that could really change the situation, especially if it will be clearly seen that economy has some flaws, which makes the direct impact on the Fed policy, and this drop could be reversed very fast if it really will be the signs that Fed will not be able to complete the targets that it has set and to follow the really hawkish policy. So that's why until we will get the first statistics in this year, I wouldn't overestimate the importance of this drop. So it's mostly emotional and attempt to play on the psychological of the markets. So let's see what will happen around the support, and let's wait for the first statistics of this year.